Beautiful. All right. So thank you guys for joining us today. Again, obviously somebody invited you here because they're excited about what we're doing at Infinite Wealth Strategist. And I'm just going to kind of walk you guys through and tell you a little bit about my story. Um, I realized at a really young age that we've all been lied to about how the financial system works. I was taught I had to go to school, get good grades, go to college, get a good job, work my way up in corporate America, and someday I would retire, right? Well, we all know we're being used by the banks. We've intentionally never been taught about money, and the system's been completely rigged against us. We all know that when we put money in the bank takes our money and they loan that money out and they earn interest on that money, and we don't get anything for it. Um, and it hasn't always been that way. But this is something that I learned at a really young age. If you've ever read Robert Kiyosaki's book, Cash Flow Quadrant, there's 4 different ways to make money, right? You've got employee, business owner, self-employed, and investor. Investor is where we all want to be, right? An investor is where you get your money working for you. Well, unfortunately, when we put our money in the traditional bank, our money is working for the bank, not for us. And that's a problem. And that's why 97% of Americans live paycheck to paycheck. Well, what is the American dream when it comes to finance? It's to create a debt-free, tax-free retirement, right? Everybody's got this dream that they're going to stop working someday and they're going to continue to have money coming in. The problem is the regular banking system doesn't set anybody up for that. So we all want to enjoy financial stability and then hit retirement age, right? And that's kind of what everybody's going for, is I'm going to work really hard and someday I'm going to stop working. But what people don't realize is that when you stop working, your money stops coming in too. So you've got to have money coming in from somewhere. Very few people in this country are on a trajectory that are going to get them to that type of retirement, a tax-free retirement where they've got enough income to come in to live the lifestyle they were while they were working, or maybe even a better one. I mean, I don't know about you guys, but I want to live a better lifestyle when I retire. I want to work really hard. And then when I retire, I want to be able to, do anything that I want for all that hard work that I did. Well, the vast majority are heading for a never ending work life. And we've all seen that. I mean, just go to Walmart or Costco. And it's sad, I see grandparents, waving me in at Walmart when they should be home with their grandchildren. So the reality is, folks, look, we need a plan. So I always ask people, do you have a current plan? I mean, school never taught me how to retire. School never taught me how to invest. A plan helps you achieve a desired outcome. Sadly, 97% of Americans have no real tangible plan. I mean, what do you do? What do you want your post-work life to look like? And a lot of times I ask clients this and they don't even know because they've never even thought about it. And folks, these are things we need to think about. What do you want your life to look like when you decide to stop working? Because then that right there should help you come up with a plan, right? So that you know how much money you need to make to have that lifestyle. And then you got to put a plan in place. Well, the answer to that question should be driving your daily financial choices and decisions. But sadly, most people don't have any type of outlook on what they want life to look like when they don't work. So then they make bad decisions because they've got nothing to work towards. Did you know that statistically the average person will live 2 decades or more past retirement? Think about that. On top of that, you have inflation, right? But this is something that I didn't know, folks. When I started going out and doing this research, I didn't realize that the average person would live 2 decades past retirement. That's 20 years. That's 20 years worth of income that an average person statistically is going to need in order to retire. And unfortunately, most of the programs that are out there are not going to do it. So wouldn't it be great if those 2 decades were the least financially taxing years of your life? I mean, think about it. It's like we work the majority of our life. The last 10 or 20 years, we should be able to enjoy our life for all that work that we did. And we shouldn't have to be dealing with the IRS and, them leeching us for taxes and all this stuff. Most people disregard planning for their fourth quarter finances. So what happens then? Well, that's when you see people at Costco or Sam's Club, right? It gets to the point, folks, where, and it's not funny, it just gets to the point where it's too late. People wait until they're in their 50s or 60s to start planning for retirement. And unfortunately, a lot of the vehicles that are out there, like I'm going to share with you here in the next couple minutes, people they've kicked the can so far down the road that there's really no coming back from it. So here's some scary statistics. I'm all about facts, right? I think facts sell because they're facts, right? It's not my opinion. Here's the national average of how much Americans have in savings by age group. And this is really scary. Think about how long these people have worked. Okay. The average person under 35 has about $6,300 in their nest egg, right? 35 to 44-year-olds have an average of a little over 22,000. 45 to 50-year-olds, a little bit more. 55 to 64, 69,000. 65 to 75, it actually goes down, and then 75 plus, there's insufficient data. I mean, folks, look, these numbers should scare you if you don't have a plan in place. This is the national average. I mean, how does somebody, right, at 75 years old, who's worked probably 55 at least of those 75 years, only have $56,000 to show for it? I mean, that is crazy. That just shows you that the rigged system is rigged, right? It's set up this way by design, and it's to keep us all working. Now, sometimes people say, well, what do I do then, right? Well, here's what retirement planners suggest. This will kind of give you an idea of what you need in order to live the lifestyle that you want. Most retirement planners, if you go to a retirement planner, they're going to recommend that you withdraw about 4% of your nest egg per year. Okay. 4% per year. And you want that to be tax-free, by the way. You want that to be in a vehicle where you're going to be able to remove that 4% tax-free. So for example, and again, here's where you can start planning, right? If you wanted $50,000 a year from your nest egg, right, where you could withdraw $50,000 a year to live, which I couldn't live off $50,000 a year, but let's say you could. And again, it's got to be tax-free, right? You would need a nest egg of $1.25 million saved up. So if we go back a slide or two to the national average, we can see we're way off from people, being able to achieve this goal. So I'll ask you the question. Did you see anybody on the national average anywhere close to 1.25 million? No. And folks, it's sad. And that is why I'm so passionate about sharing this information with people. Now, how bad is it really? Some people go, well, I have Social Security, Josh. Well, I hate to break it to you, but let's go ahead and be optimistic. And let's say that you get $1,229 a month in Social Security income. Okay. That's only $14,748 per year. All right. So you're, $36,000 short of your $50,000 goal, right? So that leaves $35,252 to come from savings or investments. Well, at a 4% annual withdrawal, right? Counting your Social Security, you still need $881,300. So where is that going to come from? Investing? People say, well, what if I just invest my money? Well, let's take a 55-year-old. Let's assume that they have an average, right? Going back to the national average, let's assume that they fit that bill and they've got almost 70,000 in savings. Well, if they were to take that 70,000 and try to turn it into the 881 so that they can hit that goal, being optimistic and saying that they invested $1,000 a month for 10 years, that investment would have to yield a return of 32.6% each year without fail. Look, we all know that's impossible. It's not even possible, right? According to the research firm Dalbar Inc., the average long-term stock market mutual fund investor gains just 5.19% annual ROI per 10 years, right? They would have to get a 32.6% return every year without fail in order to hit that goal. So investing is not going to get us there. What about a 401k, right? Almost all 401k plans invest your money where? In the stock market, right? The taxes are deferred and paid later on the growth, which means as your portfolio grows, so does the taxes. See, a lot of people don't understand that about a 401k. Would you rather be taxed on the seed or the harvest? I'd rather be taxed on the seed because right now I know what the tax rate is right now. I don't know what it's going to be 20 years down the road. What if it's 98% 20 years down the road, right? Then my 401k did nothing for me. I could have taken that money out. I could have put it in my own plan and I could have invested my own money and controlled my own money, and I could have got a different outcome than putting it in a government program, right? And again, I'm not an advisor. I'm not telling you what to do, but obviously you can tell what I think about 401ks, right? Or what I think about anything that the government touches for that matter. So governments have just one source of money to feed their fiscal appetites, and that's from you and me, folks. Just remember that. When you put your money in a 401k, remember whose appetite you're feeding. They didn't create that program for you to retire. Just a little FYI for you to think about that. So the stock market's like Vegas, right? It's going to let you win now and then to keep you in the game, but eventually the house always wins. And that's just the way the stock market works. So again, the rig system, banks use your money to create loans. They charge interest on those loans for their profit, not yours, and they keep those profits and you get nothing. It's called fractional reserve banking. You guys can look that up. It was illegal. It's been illegal in a lot of countries. It should be illegal here because they're creating money out of nothing, right? They're taking your money. Every time you give the bank $1, they can create 90 more cents. You give them $1, they only have to hold 10% of that in the vault. The other 90 cents gets entered into a ledger. They create 90 new cents and then they loan that out to the next person and they're charging interest off it. So the bank is able to print money every time you give them money. So they're making between 400 to 1,300% per year on your money, folks. This is how shady the banking system is. So here's how the rig system works, right? There's you. You go and you put your money in the bank and they entice you with 1%, right? So they're giving you 1% maybe, right? If you have a CD or something, if you just have a regular checking account, you're paying for it, right? If you've got less than 2,000 in there at a time or 2,500 or whatever type of account you have, they're charging you a maintenance fee, right? They're charging you, think about that. They're charging you to give them your money. Think about this, folks. And we keep putting our money there. They are charging you to give them your money. And when you give them your money, they get to create more of it, right? So it is the most ridiculous system ever. Now, right, you go back to the bank because you can't afford a home on your cash, right, on your income. So now you go get credit, right? So what do? You go back to the bank. Well, how does the bank have credit? Because we gave them all the money that they were able to make enough more money so that they could do loans, right? So essentially, think about it. You're going back to the bank now and you're borrowing your own money back from the bank and now they're charging you for it. So let's say you get a house, maybe they're charging you, 5% interest. You go, you buy a car on credit, again, bank's money. They're charging you 8%. Then you get credit cards, right? Because in America, we got to live above our means, right? We can't just live off our paycheck. We have to have a car that we really can't afford, and we got to have a house that we really can't afford, right? And we're borrowing other people's money to buy something in the future, right? Logically, that doesn't make sense. And folks, I'm telling you, this is not how wealthy people use money. I'm trying to really send the point home at how ridiculous the rigged system is, because I'm going to show you in a minute how to do it the right way. But look, if you're paying 12% on your credit cards, look at all the interest that they're charging you, and they're only paying you 1%, right? So here's how the banks make money. Number one, they're doing fractional reserve banking. Then they're loaning the money out, right? The bank's making, in this example, 24% off of you. Plus they made all the money off your deposit through fractional reserve. It's insane. So we don't want to be a part of this system. Now, as I did my research, I started looking at where do banks invest their money? Other than creating loans, mortgages, lending money for cars or credit cards or whatever, where's the bank investing their money? Well, you're going to be it's pretty crazy what I discovered. What I discovered is that they're using something called bank-owned life insurance. And this sent me down a very large rabbit hole. Look at the amount of money that these banks, and this is just 3 banks, by the way, look how much money they're dumping into these bank-owned life insurance policies every year. So that really caused me to go do a little bit of research. And I'll tell you what I found out. What I found out is that the banks put their money in these whole life products because they're earning a minimum of 4% interest tax-free on all of that money, yet they still have access to get that money anytime they need it without any kind of penalty. So I started figuring out that I need to figure out how I can do this. If the bank's taking my money and they're putting it in some kind of a life insurance product and they're getting a return on that money, and they're still able to use that money to invest and loan out to other people, why can't I do that myself? Okay. So how do you get out of the rigged system? Number one, you got to do what rich people do. And number two, you need to earn compounding interest. Write that down if you're taking notes. You need to earn compounding interest, folks. This is how the wealthy get wealthy, okay? They don't just trade their time for money. And let me just give you a quick example. Let's say you go to work for 30 days and you receive your paycheck at the end of the month, okay? And I want you guys to, I'm gonna help you think differently about money right now. And then everything I'm about to say after this is gonna sink right in. So you work all month long. Let's say you work 8 hours a day, 5 days a week, that's 40 hours a week, right? So that's 160 hours in a month that you work. And let's say you made $5,000. So you traded 160 hours of your time away from your family, your kids, your ministry, church, other things that are more important than making money, right? You cannot get that time back. So now when you get your paycheck and you go deposit that into a traditional bank account, you're depositing $5,000, but you're also depositing 160 hours of your time that you're now giving to the bank that you can never get back. Your family can never get that time back. Your kids can never get that time back. Okay, so follow me here because I'm going to teach you to value money more. So now you didn't just deposit $5,000, right? You deposited your time and your energy. Now you go home and you take out your debit card and you pay the mortgage company, you pay the car company, you pay your car insurance, you pay your bills, you buy your groceries, and now you have nothing left. So you just gave away all the money, all the time, right? Now you got a bunch of stuff, right? You got lights on in your house, you got food in the cupboard, you got a car to drive, but the opportunity cost attached to those dollars is now gone. It's in someone else's possession because you gave that money away, right? You gave that money to AT&T, you gave that money to the insurance company, right? Now they have that money and they're going to go use that money to make more money. Well, here's the thing, folks. I'm going to show you right now how to insure your paycheck the same way the banks are doing with their money. The banks insure their money, okay? This is what has been taken out of the education system. This is what was taken out of the school system by design, is not teaching people the value of money. Well, here's the solution. In order to get out of the rigged banking system, folks, you need to become your own bank. You need to become your own bank. You need to have a system where you can flip the script and become the banker so that you can be the one earning interest, not paying it. Okay. Here's the way you do it. If you schedule a free strategy session with one of our agents, we will teach you how to have more money at your disposal during working years, as well as having money that you want to draw as a tax-free retirement income while you're living. Okay, it's called a living benefit. This concept works 100% of the time, and it will give you 100% control of your money. Look, when you put your money in the bank, you lose control of your money. When you go to the bank, folks, and you sign the deposit slip, you're not signing it because they want your autograph. Okay. They're signing it because you're signing the rights of your money over to the bank. The bank now owns your money. Your debit card is like an IOU slip, right? You hope when you swipe it that the money is there to cover the cost, but the bank has your money. They're in control of it. Having your own banking system, okay, is going to give you control of your money. And there's three main problems that this is going to solve. Number one, it's going to create a saving and investment system that's going to give you strong, dependable growth that will never go down. You'll never lose any of your retirement funds because the market decides to correct itself. So, if you have your money in an IRA or 401k, you can lose money. When you have your money in the system that I'm about to show you in just a second, you can never lose any money. Nobody in the history of doing this has ever lost any money in this type of product. Okay. This is a system that'll protect your money from taxes, judgments, which varies by states. I think there's 2 or 3 states that it won't help in. I'm sure you can guess which states those are. You can access your money tax-free, and the government can't take it to pay for their overdue bills. All right. And lastly, the IWS system is going to teach you to recapture and recycle the money you're currently losing to interest. So think about all the interest that you're paying right now. Interest on your mortgage, interest on your car, interest on your credit cards. How much of your paycheck every month is in interest? Well, I'll tell you because I know the statistics. If you're over the age of 35 in this country and you're a male, about 33 cents of every dollar that you make goes to interest. That's a national average, 33.33 cents of every dollar for the average male over the age of 35 in the United States. 33 and a half, almost 33 and a half cents of every dollar you earn goes to interest. Folks, that's a third of your income. What if you could recapture all of that every single month, keep it in your own bank? And what if you could actually earn interest the way that the banks do? Wouldn't that be awesome? So is this safe? People ask me all the time, well, how do I know this is safe? Well, here's some of the things that when I was doing my research on this, that it had to have. Number one, it had to be as safe or safer than a regular bank account. I had to have the same peace of mind, which I don't know why we have peace of mind putting our money in the banking system. I mean, it's so corrupt, but we do, right? Because we've done it our whole lives, right? There's just something about when you put your money in the bank, you feel like it's going to be there when you get back. This has to be the same. It must offer real growth potential, right? And it must be guaranteed. We must have access to money with no restrictions or penalties, right? Unlike a 401k or any of those. I think you got to jump through hoops to get your money. You got to pay it back within a certain time. You don't have to do that here. You must protect me from taxes and capital gains. And this product has a built-in tax feature. Must not require a dramatic lifestyle change, must accomplish my wealth building strategy for me and my family, even if I die before it's accomplished. And it must give me a way to build wealth with the same money that I'm using to purchase or pay debt with. Think about what I just said. It must give me a way to build wealth while I still can use my money to pay my bills and do the things that I have to do in my life already. Okay, so it cannot change my lifestyle in any way. Now, before I go into this, I'm gonna warn you guys. I'm about to show you how this works. Once you have this information, by not using this system, it will leave you exposed to unnecessary financial risk, and you'll be throwing hundreds of thousands of dollars of interest down the drain. I promise you, you're gonna realize here in the next 5 minutes that you've thrown away a lot of money in interest that could have been saved had you known about this. See, I didn't know about this until about 3 years ago. And my wife and I were making between $60,000 and $80,000 a month. We were paying a lot of taxes, we were buying a lot of things, and we were paying a lot of interest. Had I known about this, and I would have been able to run all of that money that I was making through this system, we would be generating just in interest alone on all that money that we made over 10 years. We'd be making about $500,000 a year right now, just in interest by running our money through our own banking system. Okay, so here's how it works, folks. We use a highly sophisticated, specially engineered whole life policy with a mutual fraternal company that pays dividends. Okay, the key there is dividends. You want your money working for you. Wealthy people have their money working for them. So going back to my example of you going to work for 160 hours, making $5,000, depositing it in the regular banking system, and then paying your bills and all the money is gone. Once you set up this dividend paying whole life policy, right, as a banking policy, which means it has to be built a certain way. Okay, this is not a normal life insurance policy. It's a very highly sophisticated policy. Once this policy is built, when you put your money inside this policy, okay, you're now going to be earning guaranteed interest on your money no matter what the economy is doing. When your money's inside of a dividend paying whole life policy, you're guaranteed 4% annual on your money, plus you're entitled to annual dividends. And the company that we write with has not missed a dividend for over 115 years. Okay. So our clients are averaging around 6%, okay, annually with a very fiscally strong company. Okay. But the key here is that this is not your run of the mill life insurance product. These rare accounts, they behave more like a savings or investment account, but it's got a lot more features, meaning you can access the money inside of these policies without a penalty. For example, let's say I have $50,000 in cash value, inside my policy in my bank. I deposited money in there. It's available for me to use. Okay. What the life insurance company does, they say, listen, if you need that money for something, you can borrow it, right? You can come inside your policy and you can access those funds without any kind of early penalty, and you can pay it back whenever you want to, or you can choose to not pay it back. Why? Because folks, with a whole life policy also has a death benefit, right? This is not like a term policy where if you don't die within a certain amount of time, right, the policy expires. This is a whole life policy, meaning that when you die, that death benefit has to pay out. Okay. So as you're funding this policy, you're getting a much larger death benefit than the cash that you're actually putting in the policy. So you can actually borrow from your cash value, listen clearly, without being penalized. Meaning, let's say I want to go buy a car and it's $25,000. I have $50,000 in cash value in my policy. Maybe I have a $200,000 death benefit. Well, now I can go into my policy. I borrowed $25,000. Okay. Remember, I had $50,000 in there. I just borrowed 25. So my available balance of what I can borrow is going to go down 25,000, but I'm still earning interest on the whole $50,000 as if I didn't even take a loan. This is called a non-direct recognition life insurance company. Okay. The company we write for are called non-direct recognition. That means that when you take a loan, they don't recognize the loan off of where you're earning interest. So investors, hear me clearly. If I grab that 25,000 and I go invest it into a piece of real estate, my money is now working in two places at one time. It's earning interest inside the policy, because remember, I did not get penalized even though I borrowed out 25,000. I'm still earning interest as if I didn't borrow the 25,000. And now I have that money in a real estate property and I'm making money there also. Okay. So this is how wealthy people get their money working in multiple places at a time. Well, now you say, well, Josh, what if I don't pay the loan back? Great question. You have a $200,000 death benefit. So if you died tomorrow with 25,000 that you took out, never paid back, they'll just take it out of the death benefit when you die. So now your family would get 175,000 instead of 200,000. So folks, these policies have a living benefit where you're literally insuring your income, right? So imagine, going back to my example of you making $5,000 a month, what if you put $5,000 a month into this life insurance policy, right? Which I'm not saying to put your whole income in here. We don't usually recommend that. You want to start out less than that. But the goal is to eventually get up to where every dollar that you're earning is going into this system. Why? Well, because now you have knowledge. If you put money in the bank, that dollar that you worked hard for does nothing for you other than make a one-time purchase, right? It's either going to pay your car insurance, pay your mortgage, pay your phone bill, pay your electric bill one time. That's it. And then it's gone. You got to go back to work again. Versus if you take that same dollar and put it in your banking policy and then borrow that dollar back out and then go pay your phone bill, you just gave the phone company your money, but the original dollar that you earned is still earning interest in your life insurance policy. So imagine, this is how you're able to build wealth while you're paying your bills. You're going to insure your income first before you pay your bills, right? Now imagine 5,000 a month, right? 12 months, that's $60,000 a year. So at the end of 1 year, you're going to be earning dividends and interest on $60,000, and you had access to the money. Now, after 2 years of having the policy, your interest is going to double the next year because now you're going to have contributed 120,000 into the policy. And guess what? All while your death benefit is going up. Okay. So let me give you some examples. Okay. And let me show you that I'm not the guy that invented this. I wish I was. Look, Walt Disney back in 1995, and you could go Google all of this. Okay. He was unable to secure a large enough bank loan. He went and borrowed from his life insurance policy in order to start Disneyland. So what I'm teaching you right now, wealthy people have known about this forever. It's just they keep this information close to their chest. But Walt Disney started Disneyland using a whole life dividend paying policy. And again, it's because wealthy people understand that they need to insure their income before they spend it, right? Because if you just spend your money, it's gone. You have to insure it first. Now, Ray Kroc back in 1961, and these aren't small companies, folks. These are all companies that have been around forever. And we all know them. When he bought out his partners, he used cash value from 2 of his life insurance policies to cover employee salaries. And he also used the funds to pay for the marketing campaign of the mascot, Ronald McDonald, right? J.C. Penney wouldn't even be around today if James Cash Penney wasn't able to tap into a life insurance policy back when the stock market crash of 1929 happened, right? He took money out of his life insurance policy to save his company because he couldn't get money from the banks, right? Thank God he was his own bank. And he built the company to over 1,000 stores worth over $3 billion, right? He could have lost it, but it's because he insured his income that he was able to go tap into that source. Now, Warren Buffett said if poor people would just do what rich people do, they wouldn't be poor anymore. I mean, how simple is that? People come to me all the time and they think like, man, can you teach me, how to do all this stuff? And I said, look, just do what rich people do. That's it. They're no different than we are. They put their pants on the same way. They put their socks on the same way. They just understand and think about money and their time different than most people. Albert Einstein, again, compound interest is the 8th wonder of the world. He who understands it earns it. He who doesn't pays it. I want you guys to think about this for a minute. Think about the 7 wonders of the world. These are like things that are impossible, right? Like to make the list of the 7 wonders of the world. For Albert Einstein to make compounding interest the 8th wonder of the world, that tells you what someone of that level of intelligence understands about compounding interest. It's the key to wealth, folks. Look at this. This is what an average family looks like. And this is what I mean by you're throwing away hundreds of thousands of dollars in interest. This is a typical family. You have an auto loan, right? 20% principal, 4.5% is going to interest, right? 25% of your paycheck is going to interest on your house, 50% principal, 5% is going to the cost of living and credit cards, and maybe 10% in savings. Look, most people I know don't even save 10% of their income. But look over at the right, the yellow, that's all interest. So if you look at that over 30 years, and again, these are national averages. The average American family over 30 years pays $140,000 in interest to third-party creditors. What if you could stop doing that? And what if you could start funding your own bank? And again, you see the longer you have it, the larger it gets, right? Because every year you're contributing more money. Your bank's going to get larger and larger, right? Well, imagine that you're borrowing money from yourself. And then when your paycheck comes back in, you just pay yourself back. It's your money. You borrowed the money, you pay it back, and then you can borrow it again and then pay it back and then borrow it again. But imagine if every time you did that, you charged yourself interest. What if you were making money like the bank was making money, right? Like you have your job, but now you have your bank, and your bank is actually making money in interest that you're being charged, and it's making interest, right? When it's sitting inside the life insurance company because they're paying you interest on it. So it becomes very, very powerful. So again, going back, 34.5 cents of every dollar goes to interest. Well, how do we fix that? Well, here's what happens when you own your own bank. You're putting your money with the insurance company, right? So now that bank right there is the insurance company, and they're paying you, and I just put 5% there, right? But it's actually more like 6. So you're already doing better. The first day you open your bank, you're already in a better position because now you're making money. All right. And now, and eventually, you have to build your bank up to the point where you can buy large things like homes, but you'll get to that point. But imagine when you're there and you can buy your own home with your own bank. You can buy your own car with your own bank, which we have clients that have purchased their own car with their own bank. You're not using credit cards anymore now. You're using the money in your bank. You're borrowing it from yourself, and then you're just paying it back as credit. Well, now you're making all that interest, folks. You now have another business that's creating interest, and that interest is going right back into the banking system where that interest is now going to earn you more interest. Okay. Now I'm going to speed up a little bit because I want to give you guys a couple examples. I also want to respect your time tonight. But again, now the payments are going to you, right? And you decide when you want to pay yourself back. If you don't want to pay yourself back, don't. When you die, they'll get it out of the death benefit. That's how it works. That's why the insurance companies are willing to loan us out and give us access to our money, because they have our physical cash and they know that we're going to die someday. So they know that they're on the hook for that death benefit someday. So the insurance company is saying, look, we'll just loan you money out of our general fund if you need it. And then if you don't pay it back, we already have the collateral. I'm telling you guys, this is the most brilliant system that I have ever seen in my life. So the moral of the story is, and if you remember anything from tonight's call, remember this: wealthy people do not spend income. They do not spend income. Income is what you work for. If you have to trade your time for money, that's considered income. You do not want to put that money in the rigged banking system, because the banking system is going to take away the time it took you to make that money, and it's going to take the money. If you deposit that money in a life insurance policy, that money is going to continue to sit in there, and the time that it took you to make that money is going to continue to sit in there, because the insurance company is going to pay you a return on that money every year for the rest of your life that you leave it there. And again, they're giving you access to it, right? They're not giving you that actual money, but they're using your physical money as collateral to loan you money out of their general fund. And again, if you don't pay it back, they already have your cash. They take it out of the death benefit. So it's a beautiful system. So now here's what your life looks like. It's the opposite. Now everything goes into savings, because guess what? Nothing is leaving your banking system now. Your money is going into your banking system, and it's never leaving, folks. Once you give that dollar to the insurance company, it's going to sit there and pay you a return for the rest of your life. And remember, you can borrow that dollar, use it, pay it back, borrow it again, use it, pay it back, borrow it again. And you can use, again, recycle and recapture. We're recycling our money, and we're using the same dollars over and over and over, and we're earning interest on it all at the same time. Now, with this system, there's a whole bunch of things that you don't have to deal with that you did with the bank. Number one, there's no more credit checks. You don't have to ask anybody to borrow money out of your policy. You are the bank. They're using your collateral to give you a loan. So your collateral is already there. You don't need to get any, there's no credit checks. There's no proof of income. There's no application. There's no references, no questions asked. It's just like making a withdrawal from the bank account that you have right now. Now, I'm going to show you guys just a couple examples and we'll wrap this up. One more quote Nelson Rockefeller said: "The secret to success is to own nothing but control everything," right? By starting your own bank, you now take the control away from the rigged system, okay? So this means you get out of debt slavery. Now, our licensed agents will build you a customized cash flow analysis free of charge. This is what a cash flow analysis looks like. This shows a client, and you can see they're 49 years old, and they put $180,000 into this policy the first year, and then they put $30,000 a year roughly into the policy every year after that. Now, don't get caught up on the numbers, okay? I have clients that start out with a couple $100s, okay? And the system works the same. I'm just giving you an example of, this is actually one of our investor clients. You know, they put a lot of money in here for obvious reasons, but I want to show you guys how amazing compounding interest is and why Albert Einstein said it's the eighth wonder of the world. Watch this. This is at the 20-year mark of having this policy. Okay, so this client has had the policy now for 20 years. They're 68 years old. That red circle right there represents how much contribution the client has made. Okay, so if you look at all the money that they have put into the policy, their physical dollars, they've put in $695,380. Okay, now there is $1,030,000, $1,030,613 in cash value inside this client's bank. You hear what I just said? They've only contributed out of their pocket $695, but because they've earned interest and dividends on that $695,000 over that 20-year period of time, they've made $335,000, which you can see a couple columns over. I don't have it circled in red, but $335,233 is how much interest that client has made in 20 years. Think about this, folks. If that client would have taken that $695,000 and ran it through Bank of America or Wells Fargo or Chase Bank, they would have gotten $695,380. But because they ran it through a system where they're earning interest and they've got access to the money, they've made $335,233. That's a 48% ROI. And they now have a $2.1 million death benefit. So think about it. If the client passed away and borrowed out the entire $1,030,000, there's still going to be over $1.1 million in a death benefit that would still get passed on to the family, right? So let's break this down at policy year 75 or policy year 27, age 75. So if you look at age 75, there's $77,962 that is going to get credited into that client's account that year. Okay. The client only contributed $24,538 that year. That was their premium for the year. Once they pay that $24,538, the insurance company is going to credit that $24,000 as cash value, but they're also going to add to that the dividends and the interest on that $867,000 that you see right there, right? Because that's all the money that is in there that they're earning interest on. So that leaves a $53,424 income. So if we go all the way back to the beginning of this presentation, and I told you that taking 4% per year, you would have to save up $1.25 million, right? Well, we just showed you right here how a client took money that they had in their regular bank already, right? This isn't money that they went and made somewhere else to do this. This client had that $180,000 already in their regular bank. All they did was they moved it over into this system, and then they took $30,000 a year that they were putting in the regular bank anyways, and they just added it into their banking system. And because they'd made that one simple change, they're making $53,000 annually tax-free. And over the life of the policy, if you add up all the interest and dividends that they made for the entire 27 years, they've made $666,907, right? Look at the contribution in the green column. They've put in $867,000 of their own money, but they've made $666,000. Again, folks, that's over $500,000 tax-free that this client is earning that they would not have earned if they ran that money through the rigged banking system. Now, let's go to age, age 85, right? So this is only 10 more years, right? This is just 10 more years down the line. Their profit now is up to 1.29 million. That's 127% ROI. And if you look at their death benefit now, it's almost $3 million. Okay. And the cash value is 2.3 million. So if they spent all of the money while they were alive, 2.3 million, they still have a $3 million debt, but that's still $700,000 that's going to get paid out tax-free to their beneficiaries. So you guys can see, very powerful system. Now here's another example. This is actually on a child. This is another one of my investment clients out of Hawaii. They put a $5,000 annual per year on a child, right? This child was actually like 6 months old, right? So, but let's just skip down to like age 50. Look at age 50. The client's putting in $1,620 per year. 182,000 is their total contribution over the life of the policy. The policy has $644,000 in cash in it, which means they've made a $462,000 ROI just by starting a policy on a child for $5,000 a year. Again, folks, you can't do this with the bank. Look at age 80. When this child is 80 years old, remember, this child is going to keep this policy. When grandpa dies, policy is going to go to the grandchild. The grandchild at age 80, their premium payment is zero because the last premium ends at age 75, but the policy keeps paying out all the way up to age 100. At 80 years old, they've only put in 219,000, but there's $1.8 million in cash value inside this policy. That's 80 years of interest that is compounded, which is why it's the eighth wonder of the world, because you guys can see that if every American family had this system in place, every single person would retire. Now, lastly, my company is not a company that's here to sell you a policy. We are focused on overall time and money savings, and we provide a free mapping service. We value it at about $2,000. We provide it for free for all of our clients because we know that in order for you to become your own banker, you need to learn how to become your own banker. By having a policy, which you can go get one of these policies from other companies, but if you don't know how to drive the car, it's just a car that's going to sit there, right? It's like if you got a Formula One car, that's a fast car. But if you don't know how to drive it, it ain't going nowhere. See, you're going to know with our mapping service, we're going to help you prioritize all of your debts accordingly. We're going to initiate the most appropriate strategy for you to recapture as much of the third-party interest that you're currently paying as possible. You're going to know exactly the date you're going to be debt-free. How many debt companies can show you the exact day you'll be debt-free with that as accurate of a plan, right? That's how our mappings work. So, and I'm going to show you an example of the map here in a minute. You're going to know exactly how much money you're going to save, and your map's going to show you exactly when you will be debt-free. Here's an example of a map. Now, this is just a dashboard, okay? This is just showing you the overall result of the map. So this client had $422,500 in debt when they came to us. After we created their policy, right? We did their strategy, figured out the best scenario. We built their plan. We executed the plan. And the end result was we're saving them 11 years off paying off their debt. The client's going to save $110,000 in interest that would have went to third-party creditors that is now going to stay in their own banking system. They would have paid $236,000 in interest, but with our program, they're only going to pay $126,000. And the months that they were going to pay off all of their debt, right? And again, this is the rig system. 252 months is when they would have been debt-free. And with the Live IWS system, they will be completely debt-free and paid back all of the money that they used to get out of debt in 115 months. That's powerful. And that's what our system will do for you. Now, here's another example of a real estate investor client that we have that's actually here in the Dallas area. This gentleman came to us. He owned 6 homes. He owed $983,056 in principal and $242,867 in interest. And he had 185 months left on those mortgages. Okay. So if he would have just done it the normal way, he would have paid off all 6 homes in 185 months with $1.225 million of cash. Now, with our system, he's going to inject $300,000 into his own bank over the next 63 months, and then he will be debt-free in 63 months. That's 5 years and 3 months versus 15 years and 5 months. The client's going to save over $150,000 in interest, And if the client would continue to pay himself back the money that he already designated to those mortgages, like for example, he was going to pay those mortgages for 15 years. Well, if he pays them all off in 5 years with his own bank, why not just continue making those mortgage payments for 10 more years to yourself, right? Now, at the end of 15 years and 5 months, the client has all the money back inside their banking system. So folks, look, if you use the rigged system to buy a home, at the end of your mortgage, you're going to be out the money, out the interest, but you'll own the home. If you use your own banking system where you recycle and recapture your own money, you're going to end up with the home, you're going to end up keeping the interest, and you're going to end up getting the principal back on the house. So again, when you use your own money, your money stays in your own system because again, you have control of your money. Now, who is this system for? It's for anybody. Investors, parents who want to put their kids through college. I mean, imagine setting up a policy on your children when they're really young. And then when it comes time for college, they just borrow out of the policy to pay for college. Or they could borrow out of the policy to buy their first home or to pay for their wedding or to buy their first car, all because mom and dad thought ahead and built them a banking policy, right? You can use this to purchase vacations, homes, cars, leave a legacy for your kids, everything. All you have to do is get with the agent that invited you on this call. They will give you their unique link to their website. You can scroll down to the bottom of any page, click book a free strategy session, and we will schedule a time with you to sit down and figure out what your goals are. Because again, every client's different. Every client's going to have a different starting point. Every client's going to have a different ending point. And our professional strategist job is to save you the most amount of money and the most amount of time by creating the best strategy for you. So schedule your strategy session today. Don't wait. Look, with the new year right now and the time that we're at, we are getting extremely busy right now. People are very aware of how quick the economy can turn on a dime. Over the last 12 months, we've watched it happen. Look, folks, it's time that we get smart about our money. It's time that we educate ourselves first, and then it's time that we go educate our friends and family because we've been lied to, and it doesn't have to be this way. It doesn't, financial life does not have to be hard, and I'll just end with this. It's much harder to be broke than it is to be wealthy. It's much harder to be broke than it is to be wealthy. And I promise that if you guys give us a chance to do a strategy session for you, and again, it's free. Setting this all up is free. You will never, ever pay my company one dime for setting up your infinite banking system. We do not charge money. We get paid by the insurance company. We don't charge you anything. All we're here to do is to build the right plan for you so that we can help you achieve your goals. So I want to thank you guys for jumping on today. This is a ministry for us. So get back to the agent that invited you here, and they will be more than happy to sit down and schedule a time for you to sit down with one of us so we can put a plan together and show you guys how this system will change your life. Thank you again for joining us. God bless you guys. Have a wonderful rest of the week and have a great weekend. Bye-bye.